Hey, good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Monday, January 4th. Happy New Year's to everybody here. Hey, we do got a few economic news releases scheduled for today, so we'll jump right into it. We'll start off with manufacturing today. Later on the docket, later in the year or week, we'll have job numbers, and those will be the big ticket items this week. But right now, we'll start with the market PMI for the month of December. So anything above 50 on these next two indexes is considered expansion, and anything below that is contraction. So as you can see with the market PMI, well, we're teetering on going into contraction as we're just only at 51.2 is where we were last month. We had 51.3. ISM, on the other hand, is in contraction mode. And we had a 48.6 back in November, and the forecast was supposed to go up a little bit to 49.1, and actually went downwards to 48.2. So kind of disappointing on the manufacturing side of things. Things pulled back a little bit, where ISM is showing contraction, and the market is teetering on that borderline. Construction spending also disappointing, came in at a contraction and pulled back. So we had 0.3% back in October, and November we were expecting an increase in spending, and actually pulled back, dropped 0.4% in construction spending. Stock market's way down today. Dow's down over 400 so far this morning. A lot of it is due, well, partly our numbers here, but a lot of it is due to a global sell-off. China had implemented their new system that, remember, if you recall, back in last summer, we had all this volatility with China and their stocks going up and down. And so they were implementing a new system where if it hit certain points like 5%, it would cut off the market trading for about 15 minutes, try to let it cool off a little bit, and then once it hit 7%, it would cut off for the day. Well, it hit that 7% plunge today, and basically people are saying that this could create more panic because it didn't let it run its course, basically. So this could create more panic. So tomorrow could be another situation where maybe they might have some more panic. So a lot of it stemmed off with some bad data. Some manufacturing numbers out of China came in not so good, and so things are just plummeting right now in China. And of course, it kind of had a ripple effect through the global economy, where global markets, so Europe and the rest of Asia, and even here in the U.S., we're kind of feeling it over here. Also, something to watch out for is some tensions between Iran and Saudi Arabia. Saudi Arabia executed 47 people accused for terrorism, including a prominent Shiite cleric, Al-Namr, yesterday, and of course is creating some protests from Iran as well as a few other Shiite countries like Iraq and stuff. And he was accused he was heavily involved with the, if you recall, the Arab uprising, the spring, spring Arab uprising. So he was kind of involved with that, and I guess that's kind of where he got sentenced based off of. Bond market, we're way up. So as the bad news hit the stock market, it's good news for the bond market, and now we're up about 28 basis points, which translates to better pricing today, which is good news for us. But this isn't on solid footing. So if you see here, we got a huge opening gap here, which basically translates to that's gonna be closed probably at some point. I would say probably this week. So be prepared. Once things ration out a little bit here with the geopolitical concerns and everything else from China, as well as we get some better clarity as to what's going on between Iran and Saudi Arabia, that this will probably get closed up. But it's not to say we won't continue going upwards, but at some point this will close up a little bit. All right, folks. Hey, thanks so much for watching. I hope you guys have a wonderful day, and again, Happy New Year to you guys. And we'll look forward to a great new 2006. Take care. Bye-bye.